Welcome. I'm Ernie Goss, Professor of Economics here at Creighton University, also the McAllister Chair here at Creighton University in beautiful downtown Omaha, Nebraska. And here I am to report on our business survey for the month of July. This is the first business day of the month, and we're reporting on the 9-state region. That's the region stretching from North Dakota and Minnesota in the north, right down the middle of the country to Arkansas and Oklahoma in the south. And we're surveying supply managers, and what the theory behind the survey is what they see today, we will see later on. In other words, it's a leading economic indicator. So what in the heck did the survey say for the month of July? Well, growth slipped. Growth slipped down to just slightly above growth neutral, and I'll talk about that in just a moment. It moved from 53 in June, which is an okay reading, about the same as the national number, to 50.6 for July. Obviously, I shouldn't say obviously, but that's not good, folks. The index ranges from 0 to 100. 50 and above, 50 is growth neutral, above 50 is growth positive. So 50.6 is obviously better than below 50, but not much. And the national number will come out later on this morning. I expect that number to be down as well, but it'll be above the U.S. Now, what's going on? We're talking about an economy. The 9-state region that we're surveying is more tied to agriculture and more tied to energy. And those two sectors are not doing well. And of course, we're seeing it in the industries and business that we survey. Hiring was a bit better, moved from 49.1 to 50.0. 50.0 again, a growth neutral, so right at growth neutral. Now here I'm going to bring up the chart of our survey results, our index from June 2014 to July 2015. That's the latest number out again today. And you'll see it's trending downward there in blue. That's Creighton blue, by the way. Mid-American number moving down, is trending down. The U.S. number is, I won't say it's trending up, that's not an up. I expect the U.S. number that comes out later on this morning to be down and not showing any good growth ahead, just okay growth. And that's what we're expecting, okay growth for the U.S., less than okay for the 9-state region. All right, now what about inflationary pressures? We've got to keep an eye on that. Why? Because the Federal Reserve is going to be raising rates, in my judgment, in September. And we asked the businesses about a rate hike, how it would affect them, their business, if we had a rate hike in September. And about 1/4, that's 26%, a little over 1/4 of the business said it would be a negative for them. And about 5% said, hey, it'd be positive for them. And then the remaining 69% said no, not much of an impact. And it's only going to be 25 basis points. That's 1/4%. Now that will, one business said that'll show up in our automobile sales, and we produce automobiles, so that's where you'll see some impacts. Now the inflation gauge, as I said, well, I didn't say, but I'm going to say right now, moved from 64.9 to 57.6 in July. That's moving downward, and that scares some businesses, business leaders thinking, well, maybe the Federal Reserve won't be raising rates, maybe the economy is slowing down, they can't raise rates. I don't think that's the case. I think the Fed will raise rates in September, and I think they should raise rates in September. I'd like to see a 25 basis point increase, probably another rate hike in December, or certainly in the first part of 2016. Now, what should you watch for going forward? What are the indicators besides, of course, our indicator that you're now tuning in for? The jobs report comes out this Friday. Of course, here we are on Monday, August the 3rd, the first business day of the month. Look out Friday for that jobs report. Probably we're going to see pretty good jobs numbers for the U.S. Again, not such good numbers for this part of the country. The core CPI, keep an eye on that. Now, what's the core CPI? That's the consumer price index. When you take out food, you take out energy. That's been growing at about 1.8% year over year. That's from June to June. Now we'll look at the number for July. I expect it could be up to 2%, and that'd be a real warning signal. We'd see interest rates increase a bit. Now, I won't say spike, but they would increase. Now, that comes out on August the 19th. Now, the Case-Shiller home price index. That's coming out the last Tuesday of the month. The May number was a bit troubling, and what do you mean? What do I mean by troubling? The number declined, and in other words, home prices across the U.S. for urban areas declined in May from April. Now, when you look at May to May, now the increase is about 4.4%. That's pretty good, but that growth is coming down. Let's keep an eye on that. I won't say if it comes down, say, to 3.5, something like that, that's a warning signal that the housing market may be cooling a bit. And in some ways, that's not a bad thing. It needs to cool, but perhaps not that much. What are the risk factors? In other words, what our model, and the U.S. model is also saying is we're going to see some growth. Now, the growth in the 9-state region, the region that we survey here at Creighton University, that our growth is going to be slower. We're already seeing negative numbers for Nebraska. We're seeing meaning loss of jobs for Nebraska, North Dakota. We're seeing them for Oklahoma already. Now, that's not widely known. I don't hear anybody talking much about it, but look at them. They are. We've lost jobs in Nebraska, and we've lost jobs in North Dakota, and we've lost jobs in Oklahoma. We've gained jobs in Minnesota. That's where the strength is, in Minnesota and South Dakota. So what are the risk factors? The Chinese stock market. Why is that a risk for us? I think our stock market is priced for perfection, meaning that price-earnings ratio is pretty darn high. So anything that scares investors, you could have them moving out of stocks into bonds. That would be a tough thing for stocks that are priced, again, high price-earnings ratios. Now, what's a high price-earnings ratio? I think anything above 17, 18, 19. The market's probably priced about 17, which means you're paying $17 for a stock that earns $1 in earnings. So that's something to keep an eye on. Again, the Chinese market, the U.S. market. Wage declines. In that employment report that comes out Friday, check the wage number. I'm really getting concerned about U.S. wages. As you know, the U.S. Bureau of Labor Statistics announced that we're not getting any wage growth out there. In fact, we're experiencing the worst wage growth since they began compiling this statistic in 1982. So we're not getting wage gains. Now, why is that? Well, a lot to do with the jobs we're adding. They're not high-paying jobs. So that's the real problem. So when you change that mix, you get wages stagnating. That's what we're seeing. I'm concerned. Most economists are concerned. And certainly politicians that are in office right now should be concerned. Those incumbents. It's not going to be good explaining this next year in elections. That would be November of 2016. I would not wish to run for office with this kind of economic background. So that's it, folks. Thank you for tuning in here today for our July jobs report, our July economic condition survey, our Creighton business condition survey for the month of July. Now come back next September the 1st. We'll report on our August survey results. That's September the 1st, the first business day of September. The U.S. number will come right after our results. I expect them again to be moving sort of sideways, and that's where the economy, at least the economy in this part of the country, is going to be moving sideways. So until we meet again on September the 1st, may your economic cup runneth over.